Hey everybody, we're going to go through what are the types of loans that I can utilize in creative finance. So far, I've gotten so many amazing infographics by doing some research because I get this question all the time. We've done basically creative finance on every type of loan you can imagine. However, the infographics that are available just don't quite make sense. So we're going to go through that today. I'm going to break this down for you guys, do a little picture in picture for you, and we're going to come up with our own infographic that actually makes sense. Because here we go, let's jump into this. Compare closing. Thank you so much for this infographic because it's actually very good, but it is a little bit misleading. Okay, a couple of things that I want to point out and why somebody that's brand new would get confused. These right here, these loans right here, and these loans right here are conventional loans. Okay, these are all conventional. Okay, they're all, what does conventional mean? Conventional means you're going to a private company, a company owned by individuals, not by the government, by individuals. They've put a lot of money together, obviously a lot of resources to go out and give out loans, and those loans are called conventional. So when somebody says, I'm buying a house with a conventional loan, that means that they're going to a private institution, Bank of America, Quicken Loans, Chase, Wells Fargo. There's literally thousands of companies, thousands, no exaggeration. There's thousands, all the way down to a credit union. Those companies that give out home loans are conventional loans, okay? So here's why this is misleading, is that this is a conventional loan. Adjustable rate mortgage is still a conventional loan. It's just a type of loan underneath the conventional umbrella. Then you've got jumbo loans, same thing. It is still a conventional loan, but it is a much larger size, and so they call it a jumbo loan. So it's still a conventional. Balloon mortgage is not really a type of loan. It is a condition attached to a loan, which means, hey, we're gonna give you a loan for 30 years, but on year 5, we want you to pay us all the way off. And you're like, wait, what? I thought you were gonna give me a loan for 30 years. What do you mean I gotta pay you all the way off, right? So a balloon mortgage is somebody giving you a conventional loan for 30 years or 15 years, whatever the time frame is, and then they're saying, well, we're going to base the payment off of the 15 years or the 30 years, whatever it is you guys decide together, and we're going to give you 5 years to basically refinance us out, sell it, or pay it off cash. Okay, you have 5 years, and essentially the reason why it's called balloon is because at the end of that 5 years, the balloon pops, right? It's like pop. Now you owe us that money, okay? So those are all conventional. Now here's the other confusing part to this, is that if you look at these right here, FHA, VA, and USDA loan, these are all of these are government loans, okay? These are all government loans, and that's really important for you guys to understand, because you'll get people that say, well, you can't do creative finance with FHA, you can't do creative finance with VA, and you can't do creative finance with USDA loans, which they are 1,000% incorrect. That just tells me that they're not actually in the business and they're not actually doing it. One person told them they couldn't do it and they stopped, right? It's like somebody telling you that you have no chance of becoming a billionaire in your lifetime. Okay, great. Well, whatever I believe will become a reality, right? Or I could say, you know what? Let me figure out how to make it work. So we do sub-2 loans. We do take over FHA, VA loans, USDA loans through subject to, which is taking over the debt and keeping the debt in the seller's name and taking over deed or control of the property. So those are called government loans, right? Now, here's what's confusing is, guess what else is a government loan? Technically, so is a balloon mortgage, okay? Technically, so is a balloon mortgage. There's a lot of government loans that actually still have balloons on them, okay? Or I could work out an agreement with the seller, and I could get into the weeds on this, but I won't. I get into the weeds on in my my mentorship, which not pushing that here. Just I'm trying to make a shorter version of a video so you guys can get a little bit of help. So you've got a conventional loan, you've got a government loan, and then there's nothing in here about the third type of loan, which I call private loans. Okay. Private loan would be hard money lender. It'd be a private money lender. It would be seller finance. Oh my gosh, how is seller finance not on here? That is a type of loan, okay? So that is a massive, massive missing piece here, Okay. I do love the infographic. It gives people some help, but essentially it's very limiting in what the true scope of what all mortgages are. Okay. So let's go down to this infographic. Let's see what they got. Okay. So they got conventional. That's cool. Right. They've got the conventional. Okay. This is government. Here, let me do a different color so we can stay cohesive. Okay. This is very interesting. So conventional, boom, right there. Then you've got, second one is government. So that's government, that's government, that's government. Love it. And then adjustable rate mortgage is not a type of mortgage, okay? It's not a type of mortgage. It's a conventional mortgage with an adjustable rate, okay? So that's the other thing that people are missing. So let's go through this last one, and I'll jump into it. So this guy, even same thing. Good infographic. I appreciate it, but you're missing some stuff, okay? You're missing, where's private? Where's the private loans? I mean, half the properties that we buy are from private money lenders or sellers who end up giving us a loan on their own property, right? So we're missing a lot. So let's go through that and let's type out all the types of loans just so everybody can be on the same page and we all know exactly what we've got. So let's go through conventional. Okay, so a conventional loan, as we already talked about, is going to a private institution, a for-profit private institution, bankers, right? You guys already know that. That's the Bank of Americas of the world, the Chases of the world. That's the Wells Fargos of the world, all that kind of stuff, okay? Quicken Loans doesn't have to be a physical bank, but these big companies. Rocket Mortgage is another really big one that you guys see advertised all the time, Rocket Mortgage. These are conventional mortgage companies, okay? Now, what are the types of loans I can get underneath there? Now let's go back up here. We can talk about this. Well, I can get a conventional loan. I can get one that's jumbo, which means a large loan, right? It's very literal, jumbo loan. I can get an adjustable rate, okay? So that doesn't mean that it's a separate type of loan. It's a conventional loan through a conventional type of lender. They just add an adjustable rate as a condition of that loan, which means the rate can go up and down depending on what is going on with interest rates, okay? So that's adjustable rate. And then the other one that I would say is a balloon. Again, this is not a type of loan. This is a condition of a type of loan, right? So it's like somebody saying, well, this is a 3-bed, 2-bath house, and a different type of house is a 4-bed, 1-bath. No, they're both houses, but they just have a little bit different compartments inside of them, okay? So an adjustable rate mortgage, a balloon, all of these things are conditions of a conventional loan, okay? These are all conditions. Still, I'm going to a private lender and I'm going and getting a mortgage or a deed of trust, right? And depending on the state you're in. So conventional loans, can we take over a conventional loan subject to, which means can I buy a house from a seller? And essentially, can I have the seller, let's say here's the seller, here's their house, and can I go to that seller and say, hey, I know that you have a debt with BOA, right? You owe BOA $200,000, and that would be called a mortgage, depending on the state you're in. And you also have proof of ownership, which would be called the deed, right? You have these, and they're mutually exclusive. They are two completely separate documents. One is a debt, the other one is proof of ownership, and they are two completely separate documents, okay? And if you guys want, I'll do a whole nother video on what a deed looks like and what a mortgage looks like so you guys can actually see the documents themselves. But essentially, this is me. And I go to this seller, and this seller says, I need to get out of this house, man. I just need to get rid of this property. I just need to get rid of this property. I go, okay, well, why don't we keep that mortgage in your name, right? So I don't have to qualify. I don't have to use any down payment. I don't have to use my credit. I don't have to go through bank history, tax returns, W-2 income. I don't have to go through any of that stuff. And let's just transfer the deed into my name so I'm the owner, and you essentially still have an obligation to that debt. Okay, and there's multiple videos about why would a seller do that. A lot of case studies that we've done. Why does a seller do that? But that's what subject to is. It's basically my ability to own and control this property without ever having to qualify or purchase the home with another loan, right? My question all the time is why? Why should I pay off a loan by going and getting another loan. The only people in that situation that make any money are the two banks. So why don't we, if you already have a loan in place, why don't you let me just make payments on that and we'll transfer the ownership into my name, which means now the obligation of the taxes, the insurance, the maintenance, the upkeep on the property, all of that kind of stuff is now on my shoulders. I now have to take that over. So that's basically subject to, right? So a lot of people ask me, can I buy a subject, can I do a subject to loan on these? Here's the answer. Yes, for a jumbo. Yes, on adjustable rate mortgages, and yes, on balloons. Okay. Now there are conditions to each one of these, and I could do a video on each one of these individual conditions. There are conditions. Okay. You want to know what? Here's another one. Here's another type of loan. This is an interesting thing. I'm so glad we're going through this. Home equity line, right? Or a HELOC. Okay. A lot of people call this a HELOC. Also, a line of credit. Okay, these are all typically gone through banks, right? You go to banks for these, and I would consider these all underneath the conventional loan type of umbrella because you're all going to a conventional type of business, Bank of America, Chase, Wells Fargo, Quicken Loans. All these companies will give you a home equity line of credit. So the question is, can I, right? Can I buy a house subject to with a home equity line of credit or a line of credit? Those terms are used interchangeably a lot of times. And the answer is yes, you can. Now, there are conditions to that, and we've taken over every one of these types of loans subject to. I have proof of these, settlement statements, all that kind of stuff. So we could do case studies and break these down, but here's all the types of loans underneath conventional. Okay, is a jumbo loan a specific type of loan? No, it's a conventional loan with jumbo as a condition. An adjustable rate mortgage, it's a conventional loan with adjustable rate as the condition. Conventional loan with a balloon is a condition. It's not that's a completely different type of loan. Okay, so there's only 3 types of loans in the world, and we've gone through this already. What are those types of loans? Conventional. Then you've got the government loans. Then you've got private loans. So let's get into government. Okay, so government loans, what are they? Okay, now depending on your situation and your status, you could have a VA loan, which means you're a veteran, right? This is the Veteran Association loan. So you're going to the government. The government gives veterans amazing perks. Okay, a lot of times vets will end up getting 0 down loans, which are amazing. Okay, so VA loans. FHA loans. This is a big one that a lot of people on YouTube will say you cannot take an FHA loan subject to. And guess what? They are 100% wrong. Okay. 1,000% wrong. We've done multiple case studies on these, not case studies like, hey, this is what would happen if you did an FHA loan subject to. We have proof, and we own multiple properties with FHA loans. So if anybody tells you can't do an FHA loan subject to, they are 1,000% wrong. I'm sorry. They are 1,000% wrong. Now, the other one is USDA. Okay. Now, let's go into this again. This is what's funny. You can still have a balloon. You can still have an adjustable rate. Okay. Again, because these are conditions of the types of loans above. So the first infographic that's up here is very misleading in the sense that it's like, well, a different type of mortgage is a balloon mortgage. Well, no, it's not. It's really not. It's a condition of a conventional loan, and it's a condition of a government loan. Okay, so these are conditions, and this is where things get confusing for people. But at the end of the day, yes, you can still take these things over subject to. All right, so let's go through that one more time. VA loan. Can you take a VA loan subject to? Answer is yes. FHA loans, can you take them subject to? Yes. USDA, can you take them subject to? Yes. Another one that's very interesting is something that is very rarely talked about is HUD. HUD homes, right? So housing and urban development. Did you know that they actually give out loans? People don't know this. People don't talk about it because they're actually not really doing the business. And the answer is yes. This is another thing that a lot of people won't talk about, right? Because they're not doing this. But a HUD loan is a government loan. And people are like, well, that's not a loan. I've never heard of that. Guys, look at this. I bought this home right here. This is a home we bought. I just closed escrow on this August 6th, so a little over a month ago. And you can see right here, I have 3 loans on this, 3 loans on it. The third one's actually technically not a subject to loan. It's a seller finance, which is my third point. Okay. So here we go. We got a loan right here. Subject to loan with PennyMac, $93,658. Boom, right here. Okay, here's the stuff we're looking at. So subject to loan with PennyMac, $93,000. Subject to loan with HUD. Oh my gosh, I took over both of those loans, and then a subject to loan with John A. Marshall. He's the seller. By the way, that's a seller finance loan at 0% interest. So these are the things that so many people don't talk about, and these infographics are just missing, like just absolutely missing. So can I do all of these government loans subject to? Yes, absolutely, 100%. Yes, you can. There's proof right there. There's my settlement statement. You guys can see the filing number. You can see that it, U.S. Department of Housing and Urban Development settlement statement. Guys, boom, right here. Here's the file number. Closed, done. Okay, so when people say stuff like, this is actually a really side point. When somebody is like in my Facebook ads or my YouTube comments and like, this guy's fake or this guy doesn't do deals, it's because they haven't been following me, or maybe they're trying to steal some of my audience or whatever it is. But here you go. There's 2 deals I just showed you settlement statements on that we closed just in the last 30 days. That's not including any of the other ones. This is just deals that we are specifically showing you examples of to show you the types of loans, okay? So remember that. You're learning from somebody who's closing these deals, not just telling you it's possible, but showing you these are settlement statements that we are actually buying, okay? So government loans, VA loans, yes, you can. FHA loans, yes, you can. USDA, yes. Balloon is a condition. ARM is a condition. And a HUD loan, yes, you can. You can see it right here. Department of Housing and Urban Development, HUD. Boom, HUD loan, right? Now, there's a third type of loan that is not on any of these infographics, okay? The third type of loan is private loans. Okay, so what's a private loan? Well, you've got private money. So private money is an individual. Okay, this is like, I have so many people that, we probably have a good $5 million of people's money that are private lenders between our flips, our holds, et cetera, right? So this is where I go to somebody and I say, hey, look, we're buying real estate. And while I'm not going to let you be the owner of the real estate, I'll let you make a return on the real estate by being my lender. And people lend us money. And these are people that are doctors, nurses, lawyers, people that have excess income that are like, my 401k is not making me any money. I don't really have a return on any of my investments, and I need something better. And so we typically pay these people 8 to 10%. Now, there's another conversation in here that you're going to have so many questions, like where to find these people, how to structure these types of loans. Guys, that's another video for another day, okay? Now, private loans, then you have hard money loans, okay? Hard money means it's not an individual. It's an institution. It's a company. An institution is a company. It's like so-and-so hard money lenders, right? One of our big lenders is a company called Frank West Capital, right? So they're an LLC. They're a company that we go to and say, hey, we've got a flip or we've got a deal that we need 100% financing on, and they will get us funded really quickly, okay? So these guys are quick, they are fast, but they are expensive, and guess what else? No credit, okay? And I've actually never had any of my private money lenders ever ask for credit, which is cool, because that just takes time and energy and all that kind of stuff. So private money lenders, hard money, and then seller finance. This is huge. I mean, we just closed on, here, I'll pull it. Here's another couple of proof deals that I'll show you guys. Let's see. Yuma. Let's type in Yuma and let's see what we come up with on Yuma. Alamo. Here's a deal. We closed, what's today? September 16th. This is 1526 South Alamo Drive in Yuma, Arizona. This deal is a mobile home park. Get out of here with that. This is a mobile home park that we bought on seller finance, 100% zero down, zero interest seller finance. So what does that mean? That means that the seller was like, yo, if you can give me the number that I want, that seller ended up wanting $180,000 for his whole entire park. We have 12 mobile homes on that are all producing, $300-$400 a month in cash flow. So if you can give me $180,000, which all these wholesalers and other investors are giving me 110 or 100, if you give me 180, I'll just finance you. You just take over the park entirely. You make me payments, and over time, I'm willing to wait for those payments, because I'll end up making 180 versus selling to a wholesaler right now for 110. So a lot of people ask, well, why would a seller finance to you? Well, it's because 70,000 reasons why. I gave them $70,000 more than what you as the wholesaler were willing to give them. The only difference is they got to wait a bit of time to get that, okay? Now, so there's Alamo. Let's see, there's another deal that we just closed on as well. Here we go. Here's the other deal we closed on. 9-3. So this was a month ago. So I closed on, no, that's the same deal. Let's find the other deal. We have another deal. Yuma. We bought another mobile home park down there. Yuma, 5th Street. Here we go. So it's 5th Street is the other deal that we bought. And same thing. Boom. Mobile home park. Let's look at this bad boy. It's 35 units. Look at all these. Guys, I freaking own all this right here. Boom. All these. How cool is that? So this is a seller finance deal, right? So we gave the seller the number they wanted, and they gave us a loan. So the seller finance situation is the seller themselves. They own the house outright, and which means they have no debt on it. They own it, and they go, I'm older. I'm retired. That's what was going on with this seller. I'm older. I'm retired. I'll give you a loan on my own property. Interesting, right? A lot of people don't even understand that that's even possible. And that's why it doesn't make its way into these infographics, is that seller finance is literally half of the properties that we buy. In fact, we're buying a commercial building right now for about $900,000, all on seller finance. It's about 4,500 square feet of office space because we're expanding, we're growing, we've got big dreams, we've got people we want to hire, we got jobs that we want to create. And so we're going out and buying this building on seller finance because the seller was willing to do that. So why should I go through a 3-month process to go get a loan at 4% when I can go get a seller to seller finance me something a lot of times at 0% interest? Yes, it happens all the time. I just showed you 2 deals in Yuma that are multifamily that we just closed on, both of those with 0% seller financing. So is that a type of loan? 100%, but it is a private loan. It's a private individual that has created these types of loans for us, okay? Even a hard money lender is an individual. They're a smaller mom and pop. They're not like some big bank with billions of dollars. These are typically, regular people with probably $2 to $10 million, and they decide, you know what, I don't want to hustle anymore. I'll just lend my money out at 10%, and I'll make $200,000 to $1 million a year passively. It's not passive, but it's pretty close to passive. And they go start an actual company with that, okay? So these are all private loans. Now, here's what's interesting. Underneath a seller finance, we still have even more conditions, the same conditions we talked about earlier. Balloons, right? That's a condition, not a type of loan. We also have adjustable rate mortgages, which is a condition. Okay, these are conditions of private loans. They are not individual loan types themselves. So these are conditions. So the question is, can I take over a seller finance with Creative Finance? Yes, of course. That is the definition of Creative Finance. Should I take over a hard money loan with Creative Finance? The answer is no, unless you flip the property, which means typically where we run into hard money situations where a seller says, hey, I'm in a bad situation. I need somebody to take over this loan. And then we find out it's a hard money lender. That seller was a fix and flipper. They got too far, too deep, and they're way in over their head. Their crews might have ran out on them. They ran out of money or whatever. And now they've got this house that they own and a hard money lender with really expensive. Remember, what did I say? Hard money lenders are expensive. So if they're expensive, what happens is these sellers go, oh my gosh, get me out of this situation. Please take over this house. And we go, okay, well, could we take over your loan subject to? And they go, yeah, sure. And our whole intention is to finalize the flip. So we finish the flip. We do not want to hold any sort of expensive loan for any period of time. Typically, we're holding that for 3 to 6 months, okay? That's it. And we're holding it only for the sole purpose of flipping that house. Now, private money. Man, I will take over private money houses or private money loans subject to all day long. But obviously, I got to get to know who that private money lender is because it ends up being an individual, okay? So private loans is another thing that people do not put on their infographics. Do you see private loans anywhere? Seller finance is literally half of the way that I get loans, okay? And then also, where is the conditions under here? Like this guy's got conditions. This guy's got a condition of a loan, but he doesn't have everything lined out. So I really wanted to create an infographic that showed there's 3 types of loans. Here's the types of loans underneath them. And can I take those loans subject to? Now, here's another one that is a big no-no. This is something that has not been spoken about, and we really got to jump into it, okay? So let's go back to conventional. Now that you've seen all the loans that we can or we're okay with taking over subject to, I want to tell you one to stay away from as much as you can, and there's only one condition to doing that deal, okay? Going back into conventional, we've got another type of loan that is called a reverse mortgage, okay? There's conventional companies that give reverse mortgages, and the answer is no, stay away unless you're flipping it. You do not want these because essentially, I could go into this for 30 minutes and I'll try and refrain from doing so. Essentially, these reverse mortgage companies are loaning money to these people and waiting for them to die. And so when these people are dying or they're on their deathbed, typically these mortgage companies come in and they take control of the property. That's their end game. That's their goal. And so you have to be very careful with taking over reverse mortgage for a long period of time. So the answer is no, unless you're going to flip it. So we've done a lot of fix and flips. Okay, we've done a lot of fix and flips with reverse mortgages. So that's the answer. No, unless you are going to fix and flip it short term. Okay. A lot of times what we do with these reverse mortgage opportunities where somebody's like, I'm in a bad situation, is we sub to these. Okay. We buy them sub to, and then what do? We do what I just told you. We fix and flip them. A lot of people don't know you can do that with subject to. They think subject to is just holding a property long term. So really, really good. Having to break this down and giving this to you is something that comes up so many times for me. So again, reverse mortgages, stay away from them unless you're flipping it. Lines of credit, I'm going to give you guys a green light through everything that you can take over subject to, okay? Jumbo, yes. Adjustable rate mortgage, yes. But here's the condition of adjustable rate mortgages is I typically have less than 5% of these in my portfolio. Okay, so what that means is that I'll go buy 20 deals and only one of them is going to end up having an adjustable rate mortgage. Okay, a lot of the people in 2008, 9, 10, 11, and 12 that ended up getting wiped out with subject to is because they were buying a lot of adjustable rate mortgages, and that's a fact. Okay, so unless these are 5% or less of your mortgage, stay away from them, or of your portfolio, stay away from them. Adjustable rate mortgages, yes, you can. Balloons, yes, you can. That's a whole nother topic. Home equity line, that's a whole nother topic for another day. Line of credits, yes. Reverse mortgages, yes, if you're flipping it, okay? Government, can I take over VA loans? Yes. And then people say, well, what about my VA credits? That's another video for another day. FHA loans, wrong. Everybody says this. There's people on YouTube right now that say you can't do an FHA loan subject to, and you can't sell a wrap on FHA. They are wrong, 1,000% wrong. We've done them multiple times through closing attorneys and through title companies. Do you want proof? You want me to prove it to you? Here's a one that was really, really good. We actually went through Manchester. Let's see. This one is a really important one because on Manchester, this is a deal that one title company told us we couldn't do it. Okay. We had one title company tell us they couldn't do it. And so we go, okay, no problem. We'll go to Fidelity National Title. One of the largest title companies in the freaking country ended up closing this FHA. Okay. Go look up the loan. You can see when we closed on it. Go look up all the stuff. You can see the customer reference number. You can see the address. You can see all that kind of stuff. This was a deal that my a title company said, no, you can't do it. Okay. But why did they say, no, you can't do it? Because that's their limit of their experience. That's the limit of their experience. So instead of people saying, I don't know how to do it, but I'd love to figure out and learn something new for my business to get more business, they said, nope, it's impossible. And so I just went to somebody else and I said, hey, can you do this? They go, oh yeah, I do those all the time. Isn't that amazing, the difference between two companies? Somebody's willingness to learn and somebody's willingness to, or somebody's willingness to learn and their willingness to admit when they don't know something, and then somebody else that wants to act like they know everything and are limited in their beliefs. So really interesting conversation for another day. This video is meant to be only like 4 minutes, but here we are 20 minutes deep. So balloon, can I do that? Yes, yes, yes. HUD loans, yes. I just showed you with a settlement statement. Private loans, can I take over private money? Yes. Hard money? Yes, but you really want to do the same thing. You really only want to flip if you take over a hard money loan, okay? Because they're very, very expensive. Again, seller finance, yes, 1,000%. Literally, I'm going to tell you this right now. People think that every house I buy is subject to because they think that that's my brand. And yes, that is my brand. But at the end of the day, really what we do is we buy everything with Creative Finance. Everything we've bought, the last hundreds and hundreds of properties we bought are Creative Finance. And Creative Finance is what? Oh, this is another one. Here's another one that we didn't put in here, but I'm going to put it in here because it technically is a type of loan or agreement. It's a novation agreement. Okay, it's not really a loan, but it's a type of agreement that would be underneath the private loan aspect. And so my students know what that means. I'll keep it at that, okay? So novation agreement. So subject to, we do Creative Finance, and what does that mean? That means we're buying houses subject to, right? Taking over somebody else's debt. We take ownership and control that property. We get all the benefits of ownership just like anybody else. It's just that the debt is not in our name, right? Then we do a lot of seller finance. I would say that this is like 50%. This is probably 40%. And then the other miscellaneous stuff like novations are probably another 8%. And then we have miscellaneous stuff like every once in a while we'll do short lease option. But I really don't like lease options. I like selling to my buyer on lease option. I don't like going to a seller and saying, give me a lease option. I want to sell on lease option. I don't want to purchase on lease option because guess what I did not do when I purchased on lease option? I actually didn't buy the house. I have a lease with an option to buy. It's not me actually buying a house. So anybody that thinks that you're buying houses with lease options, you're wrong. That is not an actual loan. It's an opportunity for you to go get another loan at another day. It's such a waste of time if you're acquiring things through lease option, in my personal opinion. So that's how we buy properties. Okay, most of the properties that we hold, these are our hold properties, are 50% subject to, 40% seller finance, and 8% novations, and probably 2% other miscellaneous things like lease options and some other really, really niche things like I have this new product that we created called a dating contract. Another conversation for another day. So guys, those are the types of loans that you can and cannot do with Creative Finance, and those are brief summaries of why and why not. Okay, if you're a Subject to student, sub2.com, go into the trainings. I have much longer explanations. Typically, each one of these topics of like, okay, well, when should I take over a HELOC, and when should I do this, and how does that look, and how do I structure that? That's like really long conversations with case studies and all that kind of stuff. So go into the training if you are already a Sub-2 student. I can't do this kind of stuff on YouTube. It would take so long and nobody would watch it. So go into sub2.com, get into your course, and go down into the vault with all the amazing trainings that we've done already, and you'll see all of these videos broken down on each one of these individual topics. So we'll see you guys next time.